Hey everybody, it is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, December 4th, 2019, and we again find ourselves in the final trading hour of the day. In my opinion, the prices near the close of the market, as close as you can get them to the close of the market, are the most valid prices to make your buying and selling decisions from. During the day, you have the algorithms, you have the day traders battling it out. I considered a lot of noise at the end of the day, in particular in the last few minutes. The large financial institutions come in with size, the market makers come in, move the market to what, in my opinion, are the prices that they believe are the most valid prices of the day. So that is why I like to make the majority of my buying and selling decisions right near the close of the market, and it frees up your day so you don't have to sit in front of your computer all day and hurt your eyes, right? So anyway, let's take a look here. Big day up today. Dow Jones is up 209 points, up about 0.75%. NASDAQ is up 62 points, up 0.73%, and the S&P is up 25 points, about 0.83%. So it looks like the S&P is the winner out of the indexes today. So let's take a look. Hey, there is JT. Good to see you, JT. What's going on, my friend? You have any trades going on? How you been doing with your trading? So listen, I appreciate everybody coming here today. I know there's a lot of other things that you could do than tune into this podcast, but I really appreciate you being here. I hope that the time that you're investing with me and that you're spending with me hour and a half each day, I really hope that it's helping you with your trading and your investing. Hope it's helping you put the market into context, support, resistance levels, risk to reward, all those kind of things. So I really do. I'm really thankful that you're here, and that's why I started this channel, was to teach you what I've learned over the last 24 years from all my coaches and my mentors, and just experience of what I've gone through. And so that's why I started this channel. When I was a younger trader, boy, did I go through it, man. I went through it, and it was a horrible experience. I just don't want anyone to have to do that. And it all comes down to position size, risk to reward, having small risk if you're wrong, letting your profits run if you're right. So, all right. Hey, Gamer Squad, David is here from Denver. How you doing? Good to see you, Gamer. I was watching the Lakers and the Nuggets play last night. And I was kind of rooting for the Nuggets, but they lost. But oh well. Hey, Christopher, good to see you. Hope everything is well in the UK. Thanks for coming by. JT said, did pretty good for the month of November. Doubled my October. Oh, fantastic. Very, very good. Yeah, well, the market was pretty good in November, so good. I always like to keep touch with you guys and see what your trades are, how things are going, so you guys always see my trades, right? I always talk about my trades, but I like to see what your trades are doing as well. So, all right, well, listen, the plan for today. Oh, hey, there's Jesse. Good to see you, sir. Hey, I got your email. I'm going to reply to it about the time for our next Skype call, but I'll do that after the show. But the plan for today, first of all, we're going to go ahead and run the U.S. legal disclaimer. Then we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, what the setup was, what my thoughts were, why I entered the position, and then after that, we're going to talk about how I'm going to manage those positions either to the upside or the downside. After that, as usual, we're going to spend a few minutes talk about some principles of trading psychology. Trading psychology, managing your emotions is the most important skill that you can develop in trading, and the skill that you have to develop and master in trading in order to be profitable doing this long term. It's important that you learn the technicals. It's important to learn about resistance and support and all the indicators. It is important, but at the end of the day, the most important thing that you can develop is controlling your emotions, right? Creating a trading plan, following your plan, not letting your emotions get amplified so that you go in and mess with your plan and don't follow it. And that can happen whether you're losing a lot of money, that can happen whether you're winning a lot of money, and that can happen if you're just breaking even all the time. It gets frustrating. So you just have to manage that be able to stick to the plan. And I know I mention this every day, everybody, but I do it with love because it is so important. It's human error that messes traders up. I can promise you, I've been there myself. So, yeah, let's look at the technicals. Let's learn how to do this and all this. But at the end of the day, you have to remember that managing your emotions is the most important skill. And the best way to do that is by position sizing conservatively. If you have too large a position size, any swing to the upside or the downside is going to trigger your emotions, and you're most likely to break the plan. So we're going to spend a few minutes on that. After that, we're going to go through my entire watch list. We're going to go down through each stock one by one. We're going to look at the support levels, resistance levels, indicators, and the way that I view the market is, the indicators that I use, like MACD and RSI, moving averages, ATR channels. I look at these as potential groups of buyers, and if you wanted to enter a trade, in order for you to have the best shot of having a profitable trade, you have to be in the group of as many buyers as possible. So if I look at one indicator, like an RSI indicator, if I look at one level on the RSI that triggers, right, I look at that as one group of buyers. But it's always, it's always better not to just have one group of buyers, but several groups of buyers. So I look for a confluence, I look for a combination of indicators lining up at the same time. The way that I view the market, I look at that as several groups, 2, 3, 4, 5 groups of different types of buyers coming in. And again, if you want a stock to go up, you need to be in the company as many buyers as possible. Therefore, it's important to look for a confluence or a combination of indicators happening at the same time. Now, even though you have a good confluence of indicators, you also then have to look at the risk to reward. Do I have more upside potential than I do downside potential on this particular trade? Or are these indicators lining up at a level that's, based upon what filters you use, as far as, is it overbought based upon RSI, or is it too high in the ATR channels? Then if it doesn't offer a good risk to reward ratio, you may have to pass on the trade. Right? And then the third step is you have to make sure you do not have too many correlated positions, right? You don't want to have Apple, Google, Amazon, and Twitter and say, well, I've got 4 different positions, I'm diversified. No, you are absolutely not, because you have stocks that are all in the same industry. So make sure you have some diversification in your positions, like 1 or 2 technology stocks, maybe 1 or 2, who knows, technology stocks or tobacco stocks or healthcare stocks, or something outside of the stock realm, right? Like gold or oil or silver, bonds, something like that. So it's important that you stay diversified. So look for step 1, look for a confluence of indicators. Step 2, make sure you have a good risk to reward ratio based upon your technicals, resistance above, support below. And third, make sure you're diversified in the positions that you hold. So we're going to go down the watch list. We're going to take a look one by one. We're going to see if there's something good at the end of the day, and if I find a stock or setup that meets all my qualifications, I will go ahead and enter it at the end of the day. Then after the market closes, if anybody has any questions at all for me, please let me know. Happy to clarify anything I've discussed today if it wasn't clear. If you'd like me to take a look at any particular stock symbols, I'm happy to do that as well, give you my humble opinion. If you have any other questions about trading, even if it's outside anything I discussed today, feel free, right? I've been through it all. I think I can answer most questions. And then lastly, if you have any stock symbols that you think would be beneficial or helpful to this group today before the market closes, and you'd like me to take a look at it before the market closes to give you my opinion, please do that. Go ahead, put it in the chat, put an asterisk by it, something like that, so I know it's time sensitive. All right, makes sense? All right, so that is the plan. So I'm going to go ahead and run the U.S. legal disclaimer. I'll be back in about 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Hey, I'm on solo. How you doing? Good to see you. Thank you so much for coming by. And yeah, I'm really glad you guys are here. JT and David, Gamer Squad, Christopher, JT, Jesse, and a man solo. Always nice to see everyone. So, all right. Well, I'll tell you what. Let's go ahead and take a look at my current position, see what's going on with those before we start looking at new positions. Right? It's always important to manage the ones that we have instead of wanting to get new ones. Right? Always important. Manage the ones you have correctly, because that's real money on the line. So SPY. All right. So listen, I discuss this every day. This is a trade that I take every day. I buy the SPY at the close each day. I sell it first thing the next morning. This is the only trade that I use that does not involve technical level support and resistance at all. This is a really good back test, long-term back test from Lizanne Saunders at Bespoke Invest on Twitter. She's the chief investment officer over at Charles Schwab. But with this back test from 1993, they tested two options. Option number one would be buying the SPY ETF tracking at the open each day, selling it at the close of the day. So every day since 1993, buy the SPY at the open, sell at the close. Buy at the open, sell at the close. If you would have used this approach since 1993, every day, for all your troubles and all your work, you would have actually returned a negative 13.9% return. However, if you do the opposite, which is what I do, and buy the SPY instead at the open, I buy it at the close and sell it first thing the next morning. So buy at the close, sell the next morning. Buy at the close, sell the next morning. If you would have used this approach, which is the approach I use, you'd have actually returned a 634.2% return compared to using the other approach, negative 13.9% return. So, this is good data. And I definitely, if I'm going to allocate capital to something, I'm definitely going to allocate it to something that has a good track record compared to something that doesn't. And, it's interesting because what this really means is that all the gains in the U.S. stock market since 1993, in the S&P anyway, have come from people bidding up the price in the after hours and bidding it up in the pre-market session and then selling it into the open. Right? Look at the chart. Blue line is the buy in the afternoon, sell in the morning. Orange line is the buy in the morning, sell in the afternoon. You can see there's a clear edge to buying at the close, selling in the morning compared to buying in the morning, selling at the close, right? And, if you're a day trader, this orange line represents the range of the day that you have. There's not a lot of movement during the day. The movement comes in overnight, and day traders don't like to hold positions over the night because it feels risky. But if you look at the real data on the chart, the risky part is not holding overnight, right? The actual edge comes from holding overnight. And I also like this chart because it shows you if you trade a methodology that has an edge, like a casino, right, that actually has an edge over time, how it can play out for you. In between, there's ups and downs, there's drawdowns. It's just totally a normal part of trading. You have to expect that because it is going to happen. But let's trade for the long term. Let's not trade to make try to make a ton of money this week or this month or this year. Let's trade for the long term, position size correctly, and let our edge play out. So with that being said, I did buy the SPY yesterday at the close at 309.55 and had a nice gap up this morning. Sold it at 310.63. So made over $1 per share just on the overnight. Now, the day before we bought here and we got hammered. Right? But that happens. You never know. You just know that you have an edge and let that thing play over time. I've been using this since February 26th of this year every day. Buy at the close, sell in the morning, and it has worked out really well. It's been very, very profitable. So anyway, grateful for the nice overnight trade here, the profitable trade here. And of course, I will be buying this again at the end of the day and selling it first thing tomorrow morning. Claudia, hey, how you doing, Claudia? Hi, Greg and everyone. I've been working hard on my discipline finally this month. I've began to only trade the setup I feel most comfortable with, and so far this week has been my best one ever. Claudia, I'm so glad to hear that. Claudia, of course, discipline is very important, right? but being patient, having the discipline to be patient, wait for those setups, that's when you want to allocate capital. When you have a very clearly defined plan that has a good risk to reward ratio, right? Position size correctly. But if you're taking trades, if you're not being disciplined and you're taking trades not based upon the setup, but just because you want some action, it's adrenaline problem. It's an addiction problem for a lot of people, right? So, think about it. Why allocate capital to a trade if it's not a good, clear trade? If you need entertainment, go do something else. Go jet skiing or whatever, yoga or movie or something. But, be calm about it. Ask yourself, am I allocating my hard-earned capital to something that is good setup, that has a well-defined plan? You don't know if it's going to go up or down. We never know. But we can at least decide whether it makes sense from a technical standpoint or risk to reward standpoint. But Claudia, I'm so happy to hear that. I'm glad you're making progress on that. And, it's statements like that make the whole thing worth it. So very proud of you, Claudia. All right. Next on deck is Walmart. I did buy Walmart back here on the 2nd of December. I bought it because we had closed over the 1 ATR channel, meaning overvalue. We came back into the value zone. We've been moving sideways. We've been consolidating, a lot of price discovery going on. This is what I like. I call this a return to value. But even though it returns to value, I need some kind of trigger to get me into the trade. Well, back on the 2nd was my trigger. The day before, which we call day 1, and then day 2, the day that I entered it, day 2 washed out or went way below day 1 and then closed above day 1's close. And the reason that's important, it shows that the market tested these levels down here, did not like the levels, reverse back up. So it's good information. It's, very recent information to have. It certainly could go back down there. It did the next day, right? But it's better than not knowing anything, that the market already tried to go down, reverse back up. That's where I enter the trade. My stop on this is a close below the washout bar. This is the washout bar. Halfway of the washout bar, there should be some Fibonacci support, 50% Fibonacci support. You can see yesterday we went way below that, but I based my trades on the close of the day and it was able to close above, so I kept the position. Today it did gap up, did not hit any profit targets, however, got right back to about my entry point. It opened there, went down, went below the 50 Fibonacci standpoint number, but now it's back up. So as long as we close above 1857 here, I will continue to hold the trade. Now, this is a good example. When you have these return to value V1s, V2s here, they should take off in your direction fairly quickly. I'm going to give this another day. If this doesn't move my way, even if it doesn't hit my stop, I'm going to get out. But on return to value V1s and V2s, it should happen within 2-3 days. If this just stalls here, to me, that seems like maybe it's a little weak, something, and I might just go ahead and take the trade off. I won't do it today. But if I don't get any upwards movement, I may not, even if I don't hit my stop, it's a time stop. After 2, 3, 4 days, it's not doing anything, I'll just go ahead, take a small loss, take a small gain, and just move on to a new position that's moving. So is up today, so that's good. And yeah, so we'll just see if it closes below halfway of this washout bar, the 1857, I will go ahead and just take the trade. I will go ahead and stop out. If it closes above, I will continue to hold it. All right, and last position, didn't have a lot of positions here. I did sell a put on McDonald's, and I sold a put, the December 13, $180 strike price, meaning that the price closes above 180 by December 13th. I will be able to keep all the premium. When I sell premium, when I sell puts, I like to identify a strike price that has some kind of theoretical support, not on just one time frame, but on 3. On the monthly time frame, the $180 strike price is right between the 1 and the negative 1 ATR channel, basically at the midline. This should act as some type of theoretical support. On the weekly, the $180 price has support of 100-week moving average above it and also low 30 RSIs. And then on the daily, the $180 price way down here, I think it was at the 5th. Well, now it's 3, 4, 5, 6. Yeah, now it's even below the 6 ATR channel. Very hard to get down here. But I did go ahead, take this off today. There was only 5 cents left in the premium, meaning that I would have to hold this for, another 9-10 days just to get the other 5 cents per contract premium. But I already got about 30, I guess I've locked in about 29 cents, right? So I'm not going to hold it for another 10 days just to make another 5 cents. I've made 90% of my premium. So I did exit that. So it was a nice profitable selling premium, selling a put trade here. So we are done with Amazon. I'm going to take this off the board. I am very grateful to say today that I did hit another yearly high today. I made one yesterday, and today I was fortunate enough to make another yearly high. So, not getting cocky about it, and we're going to talk about that with trader psychology, but not cocky, but just grateful. Just grateful. Always be grateful when you're doing well. Don't get cocky about it, right? So anyway, just a quick recap. S&P 500, nice overnight trade there. We'll be buying this again at the end of the day. Walmart took the V1 entry here. If it closes below 118.57, I'll go ahead and get out. So that's it. Not too many positions. I've been very fortunate in the last couple days to have been very light in my positions, and actually had some bearish positions as well. Of course, I had a huge day yesterday on VIX, so very fortunate and grateful to have gotten through these last few days profitably, because there's been quite a lot of volatility. Claudia says, thank you. You are welcome, ma'am. Jesse says, PAWN has some intraday gains, 7 cents from hitting profit target, then drop. Not loving the current candle. Yeah, I know that's frustrating, isn't it, Jesse? When you get so close to your profit target and it doesn't get there. I'll tell you, sometimes if it's 2 or 3 cents away from my profit target and it's just sitting there doing nothing wrong just taking it off there, right? But maybe you weren't in front of your computer or whatever. But yeah, I mean, it was up nicely. I mean, it looks like you're slightly down on the trade. Dang, wish we would have hit this profit target here. But yeah, it's a V1 to the downside. But it is, it is still holding these moving averages here. And I think that was your initial stop, right? I believe it was the 200-day. So yeah, unfortunate when you don't hit those profit targets. I totally get that. But not doing too bad. I mean, you're not getting too beat up on this trade whatsoever, right, Jess? Not so far. Hey, Evan, good to see you, sir. Nice having you here. Thank you so much for coming. And we're going to be taking a look at, you guys gave me some of your trades yesterday. We'll be going through those as well. But good to see you, Evan. A Man Solo says, thoughts on these, ENBL and NBLX, bullish MACD divergence V2 just above the 30, both are in oil energy sector. All right, let's take a look. ENBL. Yeah, I like it. Double bottom with the bullish divergence. Here we have a low, deep MACD bars. We have a rally. We get some green MACD bars. We come down. We test that low. We don't even have any MACD bars. This is called the double bottom with a missing right shoulder, but it is a double bottom basically with the bullish divergence. But when that happens, just because it happens doesn't mean you enter the trade. You have to wait for some kind of signal, and the signal here is this V2. Here's day 1. Day 2 washes out day 1. Day 3 closes above day 1's close. I like it. I like that trade. If I was in that trade, I would use the halfway of the washout bar, yesterday's bar, as my stop. And I would be targeting the 50 RSI up here as my initial profit target. I like it. Okay, what else did you have? NBLX. NBLX. Yeah, I like the first one better. I definitely like the first one better, a man solo, because even though this looks like a double bottom with the bullish divergence, it's not. We have red, we did rally, we did go down here, we have less red, but we didn't have any green. You have to have green in the middle. So I definitely like ENBL first better. See, we have the red, then the green, then the red. So I hope that helps. Hey, Addie, good to see you. Addie says, grateful for VMW from yesterday. Let's take a look. Thanks for coming, Addie. Oh, now did you take that yesterday? For some reason, I thought you were waiting for today take it. Let's see, grateful. So it looks like you did take it yesterday. Well, very good. And I like what's happening here. I think maybe you bought it at the under 30, or it tagged the 30 and bounced. And then today it looks like it's closing over the third ATR channel, or the third Keltner channel, which is even better, right? So congratulations. Hey, Steve Burns, good to see you, my friend. Always great to have Steve here. It's seriously always an honor and a pleasure. Steve is such a great author, mentor. He's been a mentor of mine for years, helps a lot of people, and seriously, I'm always excited to have Steve here, and I know everyone else is. Steve says, congrats on your yearly equity high, Greg. Very nice system diversification. Oh, thank you, sir. I appreciate it. And yeah, I mean, Steve's right. When I talk about having diversified positions, you don't want to have too much tech, or you don't want to have too much, whatever. You want to have diversified positions. But, the way that I view trading is I like to have different diversified trading approaches. I don't want to just buy, breakouts. I don't want to just buy deep dips. I have the overnight SPY approach. I have crossovers. I have deep dips. I have return to values. I have higher low V1s, V2s, right? So I like to diversify not just the positions I have, but my trading approaches. So I don't have all my trading approaches just in one bag. Steve says, nice exit on VIX as well. Yeah, that was fortunate for sure. I did get out here yesterday. It did close below the 50 RSI, and the actual spot VIX index rejected the 70. So, yeah, very fortunate. that was a heck of a trade. That was a heck of a trade. Oh, Addie said first thing today. Okay, I thought I remember. All right. First thing today sounds good. Very nice. Very nice. Addie is one of my students. She was a fantastic student. And, I love to see my students, their trades, how they're doing. And, I want nothing more than for my students to succeed. You can believe me when I tell you that. Mansolo says, thanks, Greg, for V1 and V2. Do you ever take into account volume to figure the strength of the move? I think, it doesn't hurt, but it's probably the last thing that I take into consideration, to be honest with you. I look at the, I'm pretty picky on my V1s, V2s. There's some nuances. You can't have gaps. Day one cannot be larger than 1 ATR, things like that. But Kerry Lavorne, who taught me the V1s and V2s, said don't get too caught up on volume on the V1s, V2s. That's what he told me. But yeah, I like this. Low, rally, lower low, missing right shoulder. Volume's okay. Look, we're not done with the day yet. This is going to spike at the end of the day. So very good. Hey, Marco, good to see you, sir. Hope you're having a good evening in Europe. Always nice to have you here. All right, so let me make sure that's working over there. All right, that's working over there. So listen, this is the time of the day where I do like to talk about trader psychology. I go through Twitter. There's some really great channels out there that people do a great job of posting, good words of wisdom, trading words of wisdom. about the importance of psychology. They spend a lot of time and energy, burn a lot of calories doing this, and I'm very grateful for it. And one of my favorite channels out there is Stephen Goldstein at AlphaMind101 on Twitter. He was a full-time trader. Now he's a full-time professional trading coach, has worked with large hedge funds, large traders as a coach, and he's excellent. He has a great trading podcast, the Alpha Mind Podcast, where he interviews all sorts of different type of traders. I was fortunate enough to be on that podcast and be interviewed. And if you're interested in listening to that, it is on my YouTube channel in the podcast section. But if you haven't subscribed to Stephen, I would really appreciate you doing it, because it's going to help you, and I'm sure he would too. But at the end of the day, it's going to help you. So Stephen at Alpha Mind 101. But Stephen says humility is such a vital ingredient in trading, because your truth and the truth are never the same. Humility allows you to be more conscientiously aware of that at the moment when it is needed most. So, what does that mean? Well, first of all, guys, if you are a cocky person, if you get cocky about your trades, if you're boisterous about your trades and you brag about your trades, you've got to change that. I'm telling you, you have to change that. Trading is so treacherous. You're going to have up times, you're going to have down times, but the worst thing you can do is get cocky. Whenever I run into a trader that brags about his trades, or acts like he's super smart or she's super smart because of a trade, I'm concerned for them. You have to have humility. The market, if you get cocky, the market will find a way to beat you over the head. But let's, again, what he says, your truth, you may think you know a lot, you may think you're really a good trader, just maybe because you got lucky, but the truth, they're never the same, right? So you think you're a really great trader, you think you're bulletproof, but that's really not the truth. The truth is that you're just as susceptible everyone else, and you might just be on a lucky streak. So, one of the best advice I can get everybody is just be humble, be grateful. You hear me say it all the time. Be grateful for the trades that go your way. Don't get cocky about them. But when the stocks go down, don't beat yourself up either, because you have no control over it, right? So don't be too self-deprecating on your losses. Don't be too cocky on your wins. Try to stay even-keeled, because humility allows you to be more conscientiously aware of that at the moment when it is needed. So, always defer to being humble, because if you start thinking you're really good, and you may not be good, right? But even if you are good, you have to realize that you're going to have ebbs and flows. But if you start getting cocky all the time, you're going to start not trading well. You're going to take too large positions. You're going to think you're smarter than the market. So anyway, I thought this was very important. And thank you, Stephen Goldstein at Alpha Mind, for sharing that. Marco says, yes, Steve, we are longtime online friends now. That's great. Joshua, how you doing? Good to see you, sir. That podcast is how I found you. Great information. Oh, great, Joshua. The Alpha Mind podcast? It's a good podcast, right? And Stephen Goldstein's great. Really appreciate him, supporting the show, having me on. And he puts out a great podcast. I mean, all sorts of different type of traders. I feel like I think I've been like the only small retail trader on there. Like everyone else has been like, yeah, I managed the desk for Credit Suisse, and yes, I was at JP Morgan for 20 years and managed this fund or that fund. And I'm like, yeah, it's just me, it's Greg. I'm just just a retail trader. But I guess there's a lot more of us retail traders than the big boys out there as well. So I think he wanted to round it out, and so I'm happy and grateful that I was on there. All right, how are we doing here? All right. All right, so I'm going to put Addie's VWM on there. So Addie bought it there. I don't know exactly the price. She says she bought it at the open, so it's probably somewhere around there. And then we will put Addie's name tag on there so we know whose trade it is. So before we get to going through my watch, let's take a look real quick at some of the positions that you guys have. So Evan bought Smuckers back here, I think 105.70, somewhere around there, back on the 2nd with this higher low V1 so far. It looks like it has been a profitable trade. Much higher earlier in the day. I don't know if you took any profits off, but it looks like it moved up enough to take it. But so far, so good. UNG, Bing He, from our friend from Singapore, did buy natural gas down here back on the 2nd, had a huge gap up. Today it gapped down, but it is off of its low so far, so that looks like it's been a good trade so far. Jesse did buy this back here with the close back above the 200 on PANW on the November 29th. It's pretty much just moved sidewards today. He did slightly miss out on one profit target here. But looks like he's slightly under, but no real chart damage done to this chart from a technical perspective. Mount Doji bought this SVMK 1743 yesterday, moved up nicely earlier today. I don't know if he took some profit off. I hope so. If I'd have been trading that, I definitely would have taken at least one profit target off on that, but no chart damage done here. But that's a good trade so far. Wix, so Evan did buy Wix yesterday on the 3rd on this V1, V2 combo here back in the value zone. Is down, it did gap up, is down, so he is lower than his entry point, but no chart damage done here. This doesn't surprise me. You know, close below the halfway mark is how I would approach this, but that one's fine. Jesse bought AIG yesterday with the under 30 over 30 here at 51.17. Did move up nicely earlier, but now it's come back down, and I'm not sure what your stop is on this, Jesse. Is it a close back below 30, or is it a close below the 200? Either of them would be fine. Close under the 200, of course, is more conservative, but close under 30, you're risking more, but you have more leeway. So let me know on that. And then Addie did buy this here today, so that looks like it's moving up nicely. Evan said, yes, I did hit one profit target on SJM. Oh, I'm glad to hear that. I hate when a profit target goes to waste. You guys know me, right? Very good. Excellent. And a man solo says, I'll be picking ENBL at the close. Okay, perfect. If you remember, let me know what you got in at. All right, well, let's head down and see what's going on. So Apple. All right, so I mean, Apple was so extended. Glad we didn't get involved up here. We had the big day down. Then yesterday we had the huge day down. Today we have rallied, but you know, when I talk about guys having one big bar down and then having resistance at maybe the 50% Fibonacci level, right? If you go have a big bar down and you reverse back up, you're probably going to run into some resistance. That's on a bar by bar basis, but you can also take a range basis, and the range from this range down to this range. See how we're right at the 50% mark? Isn't that amazing? So, you know, the range from here to here, I'm not surprised for a rally to get back into the range of the high and the low here. So I'm definitely not going to do anything here with Apple. I don't like that we had a huge down move and we had a rally and we couldn't get past the 50%. So nothing on Apple for me today. Adobe, you know, was very overvalued. We were waiting for a pullback into the value zone. We had the big, huge bar down. We did rally to about 50%. That's all we got. Tried to rally today, and still we're stuck in this 50%. So I need this to pull back into the value zone, sideways movement, before I would get interested. Advanced Micro Devices did have a nice V1 yesterday, actually. I didn't notice this at the end of the day. We were above value, back into value. We kind of started going sideways. We had this V1, but I would have liked to seen it consolidate in the value zone, but this one's doing fine, but nothing I can do there. Amazon. Well, I had some potential hopes from Amazon to buy this today. You know, we bought this when we broke over the 250 back here on the 25th of November, and we had a nice trade up. I stopped out here when we closed back below the 200. Been patient. Yesterday we closed under the 250. I was looking for a close back over the 250 today. I would have taken the trade again, but the 250 is at 1772.74, so it is under. So I was considering taking this if it closed above, but doesn't look like at the moment it's going to close above. So nothing there. Boeing, I'd be looking at the 30 RSI. I'd be looking at a dip on the 30 RSI to buy Boeing here. Berkshire Hathaway was above value. Good to wait till it comes back into value. I would have bought it here if I would have had a trigger, but I didn't have a trigger. And we had this V move up and back down. These V moves do not last very long. That's why I like to see sideways movement before I take it. So nothing there. Caterpillar, nothing. Again, here's the high, here's the low. We literally got to about 50%, right? If we take a look at the Fibonacci here, this high to this low, look, it literally got exactly rallied back up to the 50% mark. Interesting, right? Dow Jones, same thing. Have the high, have the low. We haven't even quite got back to the 50s. So I'm not convinced that this dip is over. I'm not making a prediction, and I don't trade off of predictions, but it's fun sometimes to make predictions as long as you don't trade off them. But I'm concerned about that we literally just got stuck right at this 50% move. Walt Disney actually down today on an up day. I'm looking for this to pull back into value. Here's the big up bar. Where do you think there's going to be some likely support? At the halfway. This halfway, if you extend it over here, right in the value zone, this is exactly where I'd be looking to buy Disney. Etsy, we closed above the value zone. We came back in the value zone. Here we stopped going down. We have a day sideways. Looks like today's another sideways. Now if I had a V1, V2 to the upside, I would take that baby, but nothing yet. Ford, just a hot mess here. Don't like it. Facebook, I was waiting for a pull back into the value zone. Sideways movement, V1, V2, but nothing there. Five Below, looks like I had earnings here. Nothing there. Here we have a bottom, we have a rally, we have a lower low, we have deep bars, we do have some green bars. Here we have red bars, but the best double bottoms with the divergences are when these bars are at minimum half the size of these. These are not half. This is more than half. So this does not make for a great double bottom with the divergence. Gold miners moved up nicely. Had that crossover. I'm waiting for a pullback into, we're above the 1 ATR, looking for a pullback into value V1, V2. Spot gold, a pullback here, 1 or 2 days down, and then a higher low V1, V2 would be excellent. It would be even more excellent if we could have the 5 EMA crossing over the 20 EMA. Of course, that's a good long-term back-tested approach. Doesn't work every time. I think I've taken that crossover 3 times in a row now and had 3 losses. But, I was listening to Steve's weekly newsletter last night, and, if you have a signal, it comes down to discipline. If you have a signal that fails 2-3 times, are you going to take it the next time? You're supposed to, right? You're not supposed to pick and choose which ones that you take. You should take them when you get them. So if we have the 5 cross over the 20, I will take that, but nothing there. Google, big, strong day today. They got a new CEO for Alphabet, the same guy who's the president of Google. He is now the CEO of Alphabet as well. Looks like the market liked that, but nothing here on that. Goldman Sachs, of course, had this huge down move. We've attempted to rally, but yeah. Now, I do look at volume with this kind of stuff, right? On the way down, we had lots of volume. On the way up, not a lot of volume. To me, that's bearish. So nothing on Goldman Sachs. Home Depot, I did decide not to take this yesterday. It did go under 30, over 30. I didn't take it because that's all it had. If it would have had a double bottom with the bullish divergence, or it would have had, an RSI divergence, if it would have had a V1 or a V2, it would have closed back inside the range. That would have been one thing, but I mean, it's up slightly, not much, but that's the reason I didn't take it. It was only under 30, over 30. You know what I like? When there's a combination, not just one indication. If it would have closed back over the 30 ATR channel, maybe I would have taken it there. But anyway, if any of you have Home Depot, I hope that goes up for you. IBB, very, very strong. My goodness. This is a good example. IBB, there was like 2 or 3 or 4 520 crossovers that didn't work. And the last one has been a monster. So you never know. Intel. I was waiting, it was overvalued. I was waiting for it to come into value, move sideways. It started to do that, but there was no trigger, and now it has fallen outside of value. It's a 44 RSI. I'd be looking at the 30 RSI as a possible entry point. Russell 2000, of course, we had the high, we have the low. If we look at the Fibonacci of this entire move, so it is above the 50% line. So that looks more bullish to me than the other indexes, but nothing there. Johnson & Johnson, big strong day over here. Need to pull back into value. Coca-Cola doing really well today. There was this V1 that happened back here. It looks like that would have been a good move here. Too high for me to buy. I need to pull back into value. You're starting to see money rotate in these defensive stocks like cigarettes, tobacco, defensive kind of consumer stocks. Lockheed Martin, waiting for, imagine if you bought up here, right? It's not a good idea to buy up here. Wait for it to come back into value, undervalue. Again, Dr. Alexander says, stocks are the only thing people do not like to buy on sale. They want to buy full retail, right? Wait for them to at least become a reasonable price or an undervalued. MasterCard, nothing really here. I need to pull back into value, sideways movement. McDonald's, defensive stock, essentially up today. Did lock in my profits on the puts today, so nothing there. From a regular standpoint of a directional trade here, we closed above value, coming into value. Need a couple more days sideways, V1, V2. That's where I would take a position. You can see tobacco, Altria, which is Philip Morris, very, very strong. Can't buy up here, need to pull back into value. Merck, extremely strong, but overvalued. It's at the third ATR channel. We know about 90% of prices fail at this level. So good place to buy here. Looks strong. News is probably good, but no, I need to pull back into value. Microsoft, extremely overvalued, back into the value zone, bounced, probably about 50% bounce from here to here, 50% it's bounced. Not interested in Microsoft there. Netflix, big strong move, waiting for a pullback into value. We are back into value. I need a couple days of sideways movement to show it stop going down. Then I need some kind of entry trigger like a V1, V2. Nike, pretty strong here, but range bound, no crossovers. Philip Morris, I have been watching Philip Morris because we are above the 1 ATR channel. We came back into ATR channel. Lots of sideways movement, right? That's what I'm looking for. The reason you want to see sideways movements, because if it comes into the value zone, great, but you want to see it stop going down. Here we went down, here we went down, here we went down. Now some buyers came in. Now there's some consolidation. Now it's building a base. Now if I could just get a V1 or a V2, these are the kind of moves that can go and can start extending. So I will be watching Philip Morris, but nothing today. PayPal, need to pull back into value, V1, V2. Q's, rally today, we're not even quite to 50% from of here to here, so don't trust this. Silver down big today. I'm waiting for a 520 EMA cross. That's what I'm looking for. S&P, of course, we had the nice overnight, excuse me, we had the overnight SPY trade. I will be buying this at the end of the day. Bonds have been all over. Look at this. Gap down, gap up, gap down. It's too wild and crazy for me. Tesla, we were above the value zone, in the value zone, moving sideways, just not any V1s or V2s. If we could get a nice strong V1 or V2, I would take Tesla at this level. Twitter, it seems like everything's off of its high on the tech side. We did buy here when we had this nice V2. Here's day 1, day 2, day 3, day 2, washes out day 1, 3, closes above day 1. MACD positive. We had a great trade, up, and then I closed out the trade here when we closed below the previous day's low. Now it's in value zone, needed to pull back, go sideways. UNH overextended, needed to pull back into value. Oil had a huge day. I don't know if Murit's around, but Murit's our resident oil trader, so I hope he was on the right side of this trade. Let me know, Murit, if you're out there. VIX, of course, we did buy VIX here. We went under 30, over 30. MACD crossed over, had a huge day yesterday, and got out. It closed below the 50 RSI, so I did take it off, and good thing I did because it's down 5% today. So that was a huge one-day trade. Verizon, very strong, too high for me here. Need to pull back into value. How are we doing with our Walmart? Now, it looks like Walmart's hanging in there, right? We had the sideways movement. We had the V1. If we close below halfway of this washout bar, I will get out. So I'll have to watch that one carefully. Nothing on energy, financial sector, range bound, real estate, nothing. So we do have a crossover. We have a 520 EMA crossover here on XLU, which is utilities. So I did the back test on here with the 5 EMA crossing over the 20 EMA, and look, buy and hold was, what did I do here? All right, buy and hold 397.4% return. The crossover 171.5. The drawdown on the crossover was much less than the buy and hold, but this did perform better. But still, 171% shows that it is a profitable approach. So, let's take a look back at the chart. We're above the 1 ATR channel, but not too extended. MACD is positive. We're above the 50, and we had the crossover. I kind of like it. I kind of like it here, especially based upon, what I've been talking about with the equity charts getting resisted at that 50%. So, it's a little bit of a safety play, but I am going to take the 5 crossing over the 20 today at the end of the market. And healthcare is just too high. I need to pull back into value. So really all I have on deck right here is I have to watch Walmart. It does look okay so far. And XLU looks like that's about what the only thing I'm going to buy, unless Amazon miraculously rallied. No, it did not. All right, so Mansell is going to be picking ENBL. Jesse said 1 penny below the 200 on AIG and I will dump it. Okay, good to know. Ooh, well, you got 3-cent spread there so far, right, Jess? Hey, Mount Doji, good to see you. Yeah, SVMK, I have your little name tag here. What'd you do with this trade, Mount Doji? Did you phase out any? Did you get out? Did you get out near the top? Are you holding it? I saw it earlier. It was way up. I'm like, way to go, Mount Doji. And then I looked again and I was like, what happened? Hey, what's up, Bing He? Good to see you, sir. Glad to see that UNG is off of its lows for sure. Evan says, what do you think of LKQ? LKQ. Well, I don't really see anything here, to be honest with you, Evan. I mean, we did go into the value zone. We rallied. It's a lower high. We have to wash out the lows, which we did here. But in order for this to be a valid signal, you would have to have a V2. See, here's day 1, here's day 2, here's day 3. Day 2 washed out day 1 just fine and dandy. But today would have to close above day 1's close for it to be an actual valid V2. So And you can see it got almost right there. So me personally, I would not take this trade because there's no signal. There's no V1 or V2 signal. All right, so is Walmart going to hold here? We'll see. So I'm going to go ahead. What do we have? 5 minutes. So I am going to buy XLU today based upon that 520 crossover. Let me just double check real quick. $63.01, $62.96. Yes, looks valid. Looks valid. And we'll just have to, we'll see. We'll see what's going on here. But it is, it's a good back-tested approach. Do I know it's going to work? Absolutely not. But based upon back test, it does work pretty well, right? It's profitable anyway. All right. So what I'm going to do is I'm going to go ahead and buy this right now. 4 minutes left. All right. Okay. Where did I get filled? I got filled at 63.31 on XLU. And again, I bought it because of the 520 crossover showing some momentum to the upside. So let's take a look here. 63.31 is my entry on this. If we get across the 5 crossing back below the 20 or the price closing back below both the 5 and the 20, that will be my initial stop. I will phase to the upside as long as it keeps going up, unless we hit the 70 RSI, something like that. If we get rejected at the third ATR channel, that would also be a place for me to possibly just lock in profits. So anyway, I did get filled there, 63.31 on XLU based upon the 520 crossover. Walmart, oh, is now negative. 118.57 is my stop, so I'm going to have to get that one queued up, aren't I? Because I may have to get out of that one, which wouldn't hurt my feelings at all because it hasn't done much ever since. Yeah, so we're having the market sell off a little bit. I mean, we're well off the highs. Walmart 118.57, so it's looking okay. The other one I was looking at, guys, was Beyond Meat. Because look at this. We do have a double bottom with a bullish divergence. Missing right shoulder, you need the trigger, but it didn't quite get the 30 or under 30 RSI over. If it had, I would have bought this today, but who knows? We'll see. If it goes roaring up tomorrow, I wish I would have obviously would have taken it because it was only, I don't know, 10-15 cents under the 30, but it's my plan, right? You got to just stick to the plan. $118.57. Oh, this is going to be close. All right, so we have about 35 seconds. Be interesting to see which way the market moves here in the last few seconds. Oh, now we're down. It's holding right there. It's holding right there. Looks like AIG is going negative for Jesse. We've got 15 seconds. Is it going to hold or not? Looks like it's holding. Yes. Okay. All right. SPY. We bought at 311.46. $311.46 is our new entry on the overnight SPY trade. And then XLU 63.31. It's at 63.30. So currently overnight SPY trade here from 311.46. Sell that tomorrow morning. Walmart did hold above the stop of the halfway of the washout bar. You can see the last 2 days it tried under, and so that does show you that at the end of the day, at least, the closing prices did want to stay above 50% of that halfway. Then XLU bought that with the 520 EMA crossover. All right. So listen, before I get to more questions, I do want to quickly put in my plug today, but get your questions ready. If you have anything, need some clarification, just go ahead and type it in there and I'm happy to answer it. But just want to let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I do offer a course, 5 sessions, 2 hours, 2 to 3 hours. There's no fixed time on there, but at least 2 hours, sometimes longer than 3 hours as well, right? But I just want to make sure you have it. But I teach 5 lessons, 2 to 3 hours at a time. It is $1,000, but I think it is I think it's money very well spent. I teach you everything I've learned over my experience of trading for the last 24 years, everything I've learned from all the coaches and teachers and mentors that I have had, plus, all the things that I've put together over this time. And listen, I really enjoy teaching. I've had really good success with my clients. It's very important to me that they become good traders. So I really do put a lot of energy and work into the lessons. The first part of the lesson, I teach you the lesson. The second part of the lesson, you teach it back to me. We do a lot of chart study. I have you break down charts. We go through tons of charts. What's good here? What's good there? What are the pros? What are the cons? What's your next trade? What's the risk to reward ratio? All this kind of stuff. And hopefully what I'm teaching you here on this podcast is helping you, but one-on-one is always best, right? You can answer questions right away. As many questions as you have, right? But, if you're interested, reach out to me on Skype, or you can send me an email. The email's in the description of this video. But, before we decide that we're going to have the lessons together, I do like to have just a free Skype call. I like us to kind of interview each other. I want to know more about you. I want to know more about, your trading career, what your challenges have been, what your goals are. And, then I'll put together a course that hopefully will help you achieve your goals. So, it is $1,000, but I promise you it's worth the money. I really do promise you it's worth the money. And, for $1,000 to learn what I've learned over the last 24 years, I think is a pretty good deal, actually, compared to what I've spent and the time I've put in to learn all this stuff. So it's pretty condensed. And so if you're interested and you want to have that Skype call with me, it's a free Skype call. There's no obligation. I promise you, no pressure whatsoever. Just reach out to me on Twitter. You can reach out to me on my email in the description in the video of this video. And then if you like this channel and haven't subscribed, I would appreciate it if you would. And if you like today's content and you found it valuable, I would really appreciate it if you could take your little mouse there, little pointer, and hit the thumbs up button. It does help Google know or YouTube know that that people like the content, and then it helps promote it. And there's a lot of people out there that need help with their trading, no doubt about it. And I think if we could get them here, we could teach them some good trading principles if they start watching. So help me, help them, and hit the thumbs up button if you wouldn't mind. So okay, there's my plug, and let's see. So Evan, I did talk about LKQ. Wasn't a huge fan of that, to be honest with you. We don't have a signal. We don't have a trigger. Man Solo, ENBL at 921, safely at close below. All right, let's take a look. So Jesse got out of this, so I can get rid of this. Sorry about that, Jess, but all in all, not too bad, right? Small loss. And remember, the formula for profitable trading, guys, is big wins, small wins, break-even wins, and small losses. So what happened here on this trade? Did it fit within those parameters? Yeah, it was a small loss. Although I obviously wish I would have gone up for Jesse. All right, so man solo 921. On the V2 with the double bottom, bullish divergence, 37 RSI. That's fine. And we'll put a man solo's name up here. Got the little name tag so we know whose trade that is. Evan says it was close, but in the last few minutes dropped. Jesse says, yep, low risk loss. All right. So the only trades I have at the moment are overnight SPY trade, the Walmart trade, and the utility trade. So pretty conservative, good mix, retail, index, and utilities. So not a lot of correlation, right? Jesse says, in the rear view mirror. You know, that's so true, Jesse. I literally cannot remember the trade that I had from yesterday if it's a loss. If it's a big loss, I'll remember it. No doubt about that. But if it's just a little small loss, yeah, it kind of smarts. You're kind of like, bummer. But if you're positioning size, if you're sizing correctly on your position, not too large, you have a small loss, I promise you, you'll forget about it. And that's when you know you're trading correctly, when it's in the rear view mirror and you forget about it. So I'm definitely going to be watching Beyond Meat tomorrow, see if we can get that close under and then back over. But I do, I like what's going on here. I like the big move down with all the deep MACD bars. I like the rally and the green. Now we are lower than the previous low, but there's no red MACD bars. That shows a loss of momentum. And let me point this out to you as well. You see back here on the 12th of November, see the low? Well, take a look at where the low is in relationship to the ATR channels. It's at a negative 3.5 level, right? Here's the third, here's the fourth, got right to about the third and the 3.5 ATR level. Now we are just as low, but we're only at like negative 1.5. Do you see the divergence that's happening here? It's called an ATR divergence. And it again shows that the momentum down here was very strong. The momentum here is not as strong, as referenced by the MACD bars. If the momentum was stronger, we'd have red bars. We don't have any red bars. And here we're at a 3.5 ATR. Here we're only at a 1.5. So this is showing slowing momentum. We just need a trigger. And the trigger for me would be under 30, over 30. And if we could go under 30, over 30, I would like it even better, because here's the previous low. If we could go down tomorrow underneath and then come back up, we would have a false breakout to the downside. And a false breakout to the downside means you have the range, you have the low of the previous range, the price pokes its head down and then back up. It's actually today, let's see, the low 1705. Oh no. 73.85. And today is 73.89. So technically today is a false breakout. See how we went below the previous low and then closed back up in? I mean, it's good. It's fine. I would have liked it if it would have happened with a under 30, over 30 as well. But tomorrow, and it barely did, just a little poke down and back up. But if tomorrow we could, go down here significantly, quarter ATR, right? and then back over under 30, over 30, false breakout to the downside, double bottom with the bullish divergence. That's exactly what I would be looking for. So I'll definitely be watching Beyond Meat. Evan says, no new positions for me today. All right. So Evan, you still have Smucker's Company, SJM, looks like you're positive on the trade so far, so that is good. Being he had that nice trade on natural gas. It is off. It is lower than yesterday, but it was higher than the close is higher than the open, which is good. So we'll all be hoping natural gas goes up for Bing He. Looks like Jesse's Palo Alto, PANW. Down a little bit today, but no chart damage here. Mount Doji, don't know what happened with Mount Doji on this trade, but I know he did take it yesterday. So he's obviously up on the trade. I'm not sure if he phased out here, got out here, still in the trade. But if you're around Mount Doji, let me know. Then Wix. Yeah, Wix is kind of a bummer here. You know, one thing I don't like about this, honestly, Evan, is, well, we never quite got to the 50 RSI, so that's better. We did reject the 50-day moving average, and you know, sometimes you can take two approaches. If you have a V1, V2, if you reject the 50, you can get out, or you can just say I'm going to take a different approach, and I'm going to, you know, wait for a close below halfway. Me personally, I think I would have gotten out here, to be honest with you, with the rejection of the 50, but doesn't mean it's the right one. Then a Mount Solo, double bottom, V2, bullish divergence. That's good. And then Addy got this here at the open, close to the open here, under 30, over 30, and I like that it's closed over the third ATR channel, so excellent. Jesse says, if this stuff was easy and for the faint of heart, everyone would do it. We get to participate. Yeah, we get to. Exactly. Trading's not easy, guys. Jesse's 100% right. If it was easy, everybody would just do it. But I mean, you have to learn the technicals, you have to learn support resistance, you have to learn risk to reward. And then, as I always say, most importantly, you have to manage your dang emotions and stick with your plan. That's where most people get messed up. There's some pretty easy trading approaches out there. Give it to a 13-year-old, pay them $15 an hour, and have them trade it for you. They'll trade it right, but get it in your hands, then emotions take over, right? So trading is not easy, which is a positive, I mean a negative and a positive. It's a negative because it's not easy, but it's a positive in that it's hard for people, and that's where you're going to make your money, because they are not going to stick with your plan, and that's actually honestly where you make the money. You're taking it from other people who are making mistakes. William says, "Hey William, what's going on, bud? Good to see you. Hope everything's well in Hawaii." William says, "Hi Greg, can you show where the 70 RSI will be on Verizon?" Absolutely. Oh, are you in Verizon, William? I hope so. Let's take a look-see. Oops. Now remember, William, this is only for tomorrow where the 70 will be, okay? It changes every day. It's hard to get this to go exactly where you want it. I'm out of control with this. Roughly 6175, William. Right here, 6175 for tomorrow. If you need another reading tomorrow, let me know. Verizon looks strong though. I mean, MACD's positive. higher highs, all that kind of stuff above 50. So yeah, and you might also want to consider, William, if you are long, how it reacts around these previous highs here that are like 61.36. So kind of two places to look would be 61.36 for the previous highs, how it reacts, in the 70, 61.75. Verizon, yes, he's in Verizon. Fantastic. Glad to hear it. All right, let's see, where did Apple close today? Oh, that gave back quite a bit, didn't it? Mm-hmm. Again, doesn't surprise me. Remember, if you have a big up bar on an individual bar, it's likely that you'll have some support if you go back down at the 50%. This is on a bar by bar basis, but if you take the high and the low of a range, here's the high, here's the low. Guess what I'm saying is, just try to take the high of the move to the low of the move and just think of it as one big bar. Does that make sense? So if this was this big of a bar, a rally back to the 50%, you're going to find resistance. And look, we went above 50, couldn't hold it, and closed back below 50% of that. So it's, it's somewhat bearish, to be honest with you. Doesn't mean it can't go up, right? We never know that. So one of my old business partners came into town last night when I was in the chewing gum business. When it was taken public, he came in. He was the accountant for it. We became really good friends. He's the owner in the Arena Football League. A really great guy. His son was coming to Utah to look at some colleges, and so they visited the colleges, had dinner with him last night. And I'll tell you what, his name's Jeff. His son's named Jeff. What an impressive young man. Knows exactly what he wants to do. He's going to go to college. He wants to go to law school. Then he wants to go in the FBI. Isn't that wonderful to be 17 years old and then like have a real plan? Just like in trading, we need a plan, right? But in life, boy, I'll tell you what, it is a real blessing to be able to know what you want to do early. And if you know what you want to do, then you can just follow those steps, take that track. And I mean, that's a good career, right? Law school, FBI agent. I hope he follows through with it. But impressive young man, and I think he will. But and he's a little interested in trading. And he made a commitment to me that he was going to start saving $1 a day, $30 a month, and putting it away. And you guys know I've talked to you about that before. But if you're young, if you have children, young children, or even teenagers, whatever, start putting at least $1 a day away for them, or make them do it. By the time they retire, they're going to have so much money, and you're never going to miss $1 a day, but you will miss it if you don't put it away. So he committed to me that he was going to do that. His dad committed to me as well. Just as soon as he was 18, he was going to open that account. So anyway, I hope I made a difference with him, but it was fun seeing my old friend and talking to his son. All right. Well. All right, if anybody has any other questions for me, please let me know. Happy to answer. Don't be shy. So we ended up 146 points. So we're definitely off of our high, weren't we? So the SPY is down 17 cents in after hours. Walmart's down a couple pennies. XLU is flat. So I feel pretty good about the positions we have. We're diversified. We have some utilities, we have some retail, and then we have the index. And so, yeah, I feel good. I feel good about that. All right, well, I'm going to start saying goodbye to everyone. If you have any other questions, please let me know. Otherwise, I'm going to get out of here, put on my hiking boots, go take Kitty for a walk, and enjoy the rest of the day. Hey, Kurt, what's going on, bud? Good to see you, my friend. Kurt's a former student of mine. We just had a little brush-up call, Skype call the other night. Kurt says, hey, Greg and all. Been here listening in the background. Oh, awesome. Hope you're having a good day, my friend. Any positions, Kurt? Anything going on here? So Kurt, thank you so much for coming. Good seeing you. William, thank you. Hope you're having a good day. Nice job on the Verizon trade. Jesse, good to see you, sir. I will get back with you on the emails to schedule our call, okay? Actually, that 5:30 my time is a little early. I won't be home. I was wondering if we could change it to 6:30 on that date, which would be 7:30 your time. So, but I'll send you an email just to ask in case you're not there. And Evan, good seeing you. No positions for Evan today. That's good. Really wasn't a whole lot out there. A man solo. Let's hope that ENBL goes up for you. You'll be watching that. But thanks for coming. Good to see you. Bing He, hope you have a good day in Singapore. And we'll be watching that natural gas trade. Hope that goes up. Mount Doji, good to see you. Good job on that SVMK trade. Let me know how it turned out or what you did with it. Appreciate you coming by as always. Joshua Kaufman, good seeing you again. Appreciate you coming by. Hope you have a good day. Marco, hope you have a good evening there in Europe. Always nice to see you. If there's anything I can help you with, Marco, you please let me know, okay? And appreciate you being here all the time. Addie, good seeing you. Hope you had a good day. And congratulations. We'll be watching that VMW trade. And thanks for everything. And it was great working with you. And looking forward to speaking to you again on Skype. Steve Burns, good to see you, my friend. Hope you had a good day. Really great video newsletter that you did last night on newtraderu.com. Always look forward to watching that and always appreciate you being here. And Claudia, congratulations. That's great news. Keep it up. Please keep it up, okay? Keep that discipline going. And wait for those setups. And like you said, it's one of your best weeks ever. And you will find if you're disciplined and you wait, you're going to have a lot of good weeks. I promise you. It's when you start getting into those impulsive trades with no discipline where you're not going to have some great weeks. And what you'll find is your disciplined trades more than likely will be profitable, but you'll take all that profit back on your impulsive trades. JT, good to see you. Really glad that you doubled in November what you did in October. Always good to see you, my friend. Let me know if there's anything I can help you with. Christopher Hitchin, thank you for coming. Hope you have a good evening there in the UK. Appreciate you being here. And then David, Gamer Squad from Denver. Good seeing you. Appreciate you being here. Not today, sir. That's what Kirk says. Okay, good. I'm glad to see. I don't think there's a lot of things out there. Like I said, the only thing I took today was the XLU trade, and that was based upon something, right? It wasn't based upon just impulsive. It was based upon the 520 EMA crossover. So we'll see how it works out. And Claudia says, thank you, Greg, and I will. Fantastic. Proud of you, Claudia. Really, really am. Love to hear stuff like that. All right. Well, listen, if there's no more questions, I'm going to call it a day, and make sure to remember always go out and do something nice for somebody today. Just a little something, right? Just hold the door open or say hello or be friendly. We need more of that in this world. And, if you do something nice for somebody, they may reciprocate and do something nice for somebody else, and so forth and so on. And we need that. Right? Marco says, thank you, Greg. Have a great evening. Thank you, sir. Appreciate it, Marco. And okay, well, that's it. Hope to see everybody tomorrow during the last hour of the market. But have a great day, and I'll hopefully see you tomorrow. Okay. Oh, and if you haven't hit the thumbs up button, hit the thumbs up button on the way out. Would you? I appreciate it. All right. Thanks, everybody. Take care now. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.